We try to bring you high-quality educational and informational content every single day. Why do you think the price is having such an anemic time? The news story of the hour. Jump onto the chart. Is this the beginning of a massive financial unraveling? We got to add a little addendum to the show map today. So we start here on the daily. Now, we've been looking at the RSI on Bitcoin's daily chart for the last several days. It always has been, but it's been increasing over the last 50 years since the government has been getting bigger.
Good morning, everybody. Welcome to Coffee and Crypto Live. It is Friday, July 29th, and we're about to have a fantastic show. As you guys can see in the title, playing on that meme, Bitcoin just does not care about your broken economy. It's very much looking like, despite the fact that numbers keep coming out, that we're going to have inflation problems, and whether someone wants to admit it or not, recession is on its way. But Bitcoin has been climbing, and we're going to be discussing on this show, could there be a potential that Bitcoin just ignores all of the negativity on this positive Friday and ends up going up? We'll talk about that and more. I'm joined by two very, very fantastic people. And by the way, I said already, but in case you guys are new here, it's Friday. And around here, we talk positively on Friday. This is Positive Fridays. There's a lot of negativity out there in the world, so we're positive. So if you guys in chat say anything negative, you owe us 5 positive comments. Positively, I'm going to put you guys, at least for the day, you guys are in my top 5 favorite people in the entire world. T-Shroom, Smay, how you guys doing this morning?
Doing really, really great. My eyes are feeling very dry for some reason, but just know that with every word I'm reading, it's 10 times more difficult.
Good. That's not very positive.
So you're doing about as you deserve, or less than you deserve, or
less than I deserve.
I'm
pushing through. I'm pushing through. I'm overcoming adversity.
Makes sense.
That is positive.
Yeah.
Smay, have you joined a fraternity recently?
No, but I actually have something to say about that. You guys are looking quite dapper today.
We are.
Thank you.
I got the.
Why don't you join the club, Smith?
Why don't you move your laptops out of the way? Let's see what you're wearing. I want to do a little fashion show here. Oh my gosh, look at that! Move
Nice
that
and
mic
fresh,
out of the way a little bit.
right out the bag.
Look
Mint.
at that.
Mint
Oh, you're asking what's on my head?
Yeah.
It's a crypto Jebb merch hat item.
Lit.
Wow.
And
Lit,
guess
fam.
what else? I'm pretty sure that's what you guys are wearing. Merch.
Yeah, look at that.
Wow, yeah.
So, in case you guys were wondering, you guys can get this kind of merch, this beautiful merch, this snapback, and those hoodies and other beautiful merch on our merch store. Link in the description, guys. It is so cool. Go ahead and get yourself, represent the show. But without further ado, I also wanted to show off I fixed my hair this morning. It's very beautiful.
Yeah.
It looks very good.
Thank you.
Very handsome.
I would like to read some green names as I look really pretty this morning. We have Gia S. We have Elliot Locke. We have Sultan of Salt. We have Kelly Kellum. We got Matt C. We got, who else we got here? We got Mitch Shaw. We got Agent Gold. We got JoJo. We got Crypto JMP. We got Stinky Nerd. We got Silent. We got Crypto Red Fox. We got A Mellow Fellow. We got Cash to Cats. We got, who else here? Crypto Ben Franklin. That's
Nice.
right. And
Wow.
that's about it that I'm seeing here. I still do not see our guy whose name starts with D. So we're gonna move on.
He's been
guy.
jumping in late.
You
recently.
gotta show up on time.
Yeah.
All right. Anyways, back to you, Tim.
Yeah, we're gonna have a good show today, guys. 300 people watching. 300 people watching, but 62 likes. Go ahead and smash that like button if you're feeling like you're in a negative mood today. That's okay. We still love you. You hit dislike and then comment you're having a bad day, and then we'll pray for you. But we're gonna go ahead and save the sponsors for the middle of the show. So we're gonna move on to our next topic, and that is our market pulse. There is still news out there. Today, there wasn't as much as there has been in days past, but, that's actually a positive thing. T-Shroom, what is happening in the news front?
Absolutely. Well, to be honest, there's a decent amount of news, and we're going to dive right on into that. And so if Smay, if you will, I don't want your dapperness to get in the way, but if you could get to my screen, is that going to be possible?
I guess I could allow it.
You're going to allow it? Okay, awesome. Santander to roll out crypto trading services in Brazil. This is pretty big. This is a large bank, but it's actually in a pattern here of other large Brazilian banks adding crypto services to their suite. Speaking to journalists on Thursday, Santander Brazilia's CEO Mario Leao reportedly said the bank hopes to share more information on the matters in the next few months, possibly during the publication of its next quarterly results, but that we recognize that it is a market that is here to stay, speaking of crypto, of course, and it is not necessarily a reaction to competitors positioning themselves. It is simply a vision that our client has demand for this type of asset, so we have to find the most correct and most educational way to do it. The announcement follows a similar move from Brazil's largest bank, Nubank, which began offering Bitcoin and Ethereum trading to users in May. Earlier this week, Nubank said that in just 2 months, it had acquired 1 million users on its crypto trading platform. Pretty impressive there, and props to you if you knew that Nubank was Brazilian's largest bank. In a sign to demonstrate its belief in the cryptocurrency, Nubank is also allocating 1% of the cash on its balance sheet to Bitcoin. Pretty impressive, taking a very Tesla-esque move there. Pretty impressive to be sure. Well, you all have been wondering, and yesterday we put out an afternoon video where we called it early, but the Cardano Vasil upgrade is indeed delayed again for more testing. The hard fork has been pushed back by at least a few more weeks until testing is complete, said developers. There could be a few more weeks from where we are before we go to the actual Vasil hard fork, Kevin Hammond, IOG technical manager, said in a monthly update call Thursday. Testing for inevitable issues was taking place and any problems were being fixed by the development team. All users have to be ready to progress through the hard fork to make sure the smooth process both for them and end users of the Cardano blockchain, Hammond said. So, just a pretty quick headline there. Nothing is broken, nothing is crazy, but it is delayed yet again.
I do think it's interesting because we made a video yesterday. T-Stream actually made a video yesterday afternoon, and we titled it. We talked about the Vasil is going to be delayed. We got some great negativity in the comment section because people were saying we were spreading FUD. And sure enough, this morning, all the reports come out, they are delayed. So, the comments shifted up very quickly. This is, it's not like we got any pleasure from this. We wanted to be accurate with Cardano. And the truth is the fact that at one point, July 29th was listed as the date for the Vasil hard fork release. Then they got really quiet and it looked like they were postponing it. So that's what we talked about. That's what we said. Like, hey, it's looking like we're going to be delayed again. And sure enough, within hours after posting the video, it is confirmed. So good call on that, T-Shroom. Good job, team. Self high fives. We broke it early.
Yeesh.
Yes.
Absolutely. But I feel like when I made that video, I was not necessarily making any kind of definitive claims. I was saying, they have till the end of the month. They said last week of July. So they still have a couple more days. Obviously now, though, they have released guidance that they are going to delay that release of the Vasil hard fork. It's
not stopping Cardano's price from pumping along with the rest of the crypto market. So
indeed,
nothing bearish about it other than they're just trying to get it right and they're delaying. And I'm not too concerned. But the haters, if they want to continue to say Cardano is problematic,
well, as Taylor Swift says, haters gonna hate.
Thank you.
And the player's gonna play, which if there's nothing to be disappointed in. There's nothing to be worried about in Cardano, but over at ZipMex, there's plenty to be worried about. After the crypto exchange ZipMex files for bankruptcy protection in Singapore. Southeast Asian-focused cryptocurrency exchange ZipMex said it had filed for bankruptcy protection in Singapore, becoming the latest victim of the global downturn in digital cryptocurrencies. Singapore-based ZipMex resumed withdrawals last week, a day after suspending them on July 20th, and said it was working to address its exposure to $53 million in crypto lending, Babel Finance, and Celsius. So trying to salvage what they can there over at ZipMex as they're filing officially for bankruptcy there. In Singapore, they've definitely got an uphill battle to face there. It's going to be tough, but it's definitely going to be tough. And then even worse news. Actually, well, depending on how you look at it, but news more domestically, bad news. Crypto lender Voyager ordered by U.S. regulators to stop misleading customers. And at first I was like, how could this be? How could this be? Because the claims that they're making here is wild. Voyager has made various representations online, including its website, mobile app, and social media accounts, stating or suggesting that Voyager itself is FDIC insured. Customers who invested in the Voyager cryptocurrency platform would receive FDIC insurance coverage for all funds provided to, held by, or With Voyager, the FDIC would insure customers against the failure of Voyager itself, the letter said. These representations are false and misleading, and based on information we have to date, it appears that the representations likely misled and were relied upon by customers who placed their funds with Voyager and did not have immediate access to their funds. So really exposing themselves to giant liability issues. And if you don't believe it, check out this tweet coming straight from them. Apparently I can't verify it, but it looks legit. Have you heard USD held with Voyager is FDIC insured up to $250,000, which is the standard of FDIC. If you have a Robinhood, if you have a TD Ameritrade, if you have a Morgan Stanley account, it's FDIC up to $250,000. That is the standard. I did not mean to click through there. That's kind of funny, but it's a real tweet. Look at that, bona fide tweet. So yeah, not good. We didn't see this coming. I had no idea that Voyager was out here making these claims. You can leave my screen for just a second. My theory here is that they had an overeager intern, perhaps in the marketing department and social media management department, who just didn't know the facts, and maybe they just assumed they were FDIC insured. I hope that this did not come from the top.
That seems like a really big thing to just completely be wrong about. I think, it'll be interesting when that information comes out.
Yeah, but it does give us the opportunity to go ahead and say nothing in crypto is FDIC insured. I don't even know if the ETFs for Bitcoin are FDIC insured. But just go ahead and assume as of now that nothing in crypto or crypto related is FDIC insured.
Yeah.
Coinbase is, if you're investing in Coinbase. But even that, you're still taking a risk. So anyway.
Well, all the more reason if you don't have a cold wallet set up already, you need to go get one
ASAP.
And if you want one, we have a link for Ledger down below. Go check out the description. But yeah.
Absolutely. Well, you don't need to go to my screen for this, Smay. Actually, I take that back. You can go to my screen, Smay. I'm going. So we've got some new economic numbers here from the United States. They dropped here at 8:30, and this is the PCE price index year-over-year number. So the actual print was 4.8, and that was just a hair over the forecast of 4.7, which was also the previous number. We'll go ahead and skip the PCE index year-over-year number, and we'll jump to the Michigan Consumer Sentiment Final, which was 51.5, a hair over the forecasted 51. So you want that consumer sentiment to be higher, and it was, so that's generally positive, up from previously 50 of the same metric. So that is all data that we're getting this morning. And remember, markets are going to be moving on data, economic data, because the Fed's guidance is going to be much more limited, if at all, up until September. This is something that was very, very noteworthy from the press briefing on Wednesday from Jerome Powell. So did you have any thoughts on these numbers?
I do.
Tim?
I have a thought that I really would love to know the answer. This was June numbers, or is this July numbers?
These are June.
June, okay.
June, and the Michigan sentiment is July.
But remember when we were about to get the CPI numbers, literally like 2 days before the White House came out kind of saying we're going to have high numbers, but they're inflated. They're outdated. This has to do with last month, and we fixed things this month. So if we're just analyzing June right now, are we going to see the same argument be made that, hey, we actually have to wait till next month's numbers come out before we can actually make a play here? These are overinflated. Because remember, the narrative that a lot of people are running with right now is that we've kind of peaked on our inflation numbers, and so this is just another way to track inflation. So I think that there's a chance that the White House and the Fed give themselves an out of saying that we're in trouble with these numbers, saying that this is just a continuation of the June numbers being a little outdated and inflated, in their words. I think some of the rest of us don't buy that argument as much, but I think as important as seeing those numbers were, I don't see that the price of Bitcoin really responded that much to that, and we'll go look at the charts here in just a second. I think it'll be more interesting to see next month when we see CPI and then these numbers. These are the PCE.
That's right.
All right, so we'll track these next month as well to see if there's a correlation there.
That's right.
Yeah.
That's right. And we also got the Euro area core inflation and their GDP. So guess what? The EU actually has a positive GDP. It was forecasted to be 0.2. And I'm looking here at this statistic here. It was forecasted to be 0.2, and we actually got, the EU got 0.7, so slightly higher than forecasted. And that's really a head scratcher, considering their economic conditions there are much less favorable than ours. but their inflation rate also showed that it peaked. So if it's any consolation to the U.S., and that's the Italian, specifically the Italian interest rate, inflation rate there. That's not the EU. Just so everybody's on the same page. So if the Italian economy is any consolation, I know I'm doing a lot of zooming in, zooming out. This is an indicator that the inflation has peaked, but this is Italy. This is not the U.S. Italy is a totally different economy from the U.S. But okay, so you might be wondering, what is PCE, T-Shroom? What is this whole PCE that you're talking about? Well, it's pretty much the same thing as CPI, but this graph is kind of a good breakdown of the differences. And it also, just know that the PCE is also a measure of the entire U.S. economy, not just the urban economy. So the CPI does have a weighted bias towards urban places, just for a variety of reasons. But the Fed is something. This is definitely something you want to know. The Fed much more closely looks at the PCE. Why they do this, I'm not 100% sure. But that's just the case. They also, of course, look at the CPI numbers, and that's the headline numbers that Wall Street cares about so much more.
Yeah.
So, we are always going to be left wondering exactly why that is, but this is a good breakdown for your own personal knowledge.
Yeah.
And the main difference here is housing. So housing is a much bigger consideration, more than double or about double the consideration in the CPI figure versus the PCE figure. So there you are, a little bit of a bonus there. And also medical care is much more outsized on the PCE than in the CPI. So little economic bonus there for you to be able to help digest. Well, that wraps up our Market Pulse, folks.
Come on.
Thank you so much for joining the Market Pulse. And if you have any suggestions of things you want to hear, definitely hit me up at T-Shroom on Twitter. You're going to love it.
Yeah, we're going to do a little different today. Before we jump into TA, we're going to answer some of these super chats. Also, shout out to Frankie Candles in chat. Candles Mafia, if you are here, we love you guys over here at Crypto Jebb. Welcome, Frankie. We're going to get you on the show here very soon. And I'm looking forward. We haven't set a date yet, but I'm looking forward to come on your show here soon. I've been watching when I can. Great show going on. If you guys don't follow Frankie Candles, go do so ASAP. But we had a couple super chats that just came in. If there's another one I don't cover, make sure you guys point it out. But Elliot Locke said, explain by definition why we are in a recession, or why would the White House be fighting back on that by saying we are not, instead of being transparent. Lots of peeps asking about Jebb 2, prayers still out. So I'm actually, Elliot, I'm going to wait to answer that question for the discussion section, because we're gonna be talking about recession here in the discussion section. As far as Jebb, I put in chat here a little ago. If people still haven't heard yet, Jebb, his wife had another miscarriage here a week and some change ago, and so obviously that is very heartbreaking. That alone right there was heavy. And then while in the hospital, they just couldn't catch a break. They both caught COVID. And Jebb, I think, is feeling a little better. His wife is still struggling, so keep them in your prayers. And I'm hoping to get him back soon. But we just, at this point, we're just praying over him, and we love him. So you guys, thank you so much for being patient with all that. And nobody's more frustrated than Jebb with this whole situation. We had another super chat from NMCT. Said, I love Cardano, but the delays are getting kind of ridiculous. Tech innovates at lightning speed. What's the point of having the best engineers Model T if everyone is working on hypercars? So here's the thing. I think first of all, I agree with you, and we got to be fair. We got to be fair. If we're going to fuss at other projects for delaying, you can't just say Cardano, you go on this one unscathed. The difference is that a lot of other projects kind of leave us very open-ended. When we see Cardano delays, it's more like, hey, we're delaying it a month or two. Ethereum, we delayed years. Solana, we have crashes. Cardano, they're delaying it, and it's because they want to get this thing exactly perfect on the dot. And so I continue to have patience on them, but I do think it's a fair critique for anyone out there.
My one thought, though, just to play devil's advocate there, is that I do think that little delays compound over time. So if you keep kind of stringing something along, then eventually, Ethereum might have delayed for a year, but if all the little delays add up to a year, it's the same amount of delay. Right?
Well, that's not the case yet.
Yeah, that's not what's happening yet.
So,
but the
Cardano's
other thing is,
hold on real quick. Cardano's had other things delayed that they delayed for like a month, a couple of weeks, and then it launches and it's fine.
Yeah.
Vassal Hard Fork, they delayed it 1 month to July. They're delaying it now into August. We're talking about 2 months tops on one issue. I would say if it was the same issue being delayed over and over and over and over and over, now we're starting to run into problems like what Ethereum 2.0 had, and with Solana. Cardano, they'll delay something a little bit, then get it done. It's launched. It's good. This one, is not a significant delay just yet.
Of course. But I would even say, though, I think the analogy he gave was really good, and that's what I think is something to keep in mind.
Yeah.
Is basically what he said is, what's the point of having the best engineered Model T when everyone's making supercars now, which it's definitely something to be considered. So I think that's just something to think about.
I think it's true, but I think you can make an argument that the supercars that everyone else is building are still extremely flawed, whereas Cardano's taking their time and they're building it the right way.
Sure.
But it is open to every person's individual opinion and thought, and you got to do your own research and decide if you're comfortable investing in Cardano for yourself. Again, some people will accuse us oh, Crypto Jebb, you must be being paid by Charles himself first of all, we don't take any coin sponsorships. Second of all, we just really, really love the project, and that's what we're gonna do. If we like something, we're gonna talk about it. If we don't like something, I want to do a much better job going on in the future with how we do things. Hey, we're gonna give everything a fair shake, and if we don't like something, we'll just we'll talk about our issues, but still say, hey, there's merit to this coin. If you want to do your own research and you like this and you're invested in it, good for you. We'll still do the TA on it if you guys want to see the TA. But as far as Cardano, just the fundamentals in that whole team, I'm not gonna apologize for loving their team and what they're getting going. And if my opinion changes down the road, I'll let you guys know. We were even critiqued by Cardano themselves. They kind of fussed at us for how much we talk about their price action. And it's like, I'm sorry, we're a price analysis channel, so we're going to do it. Still love you though. In case you guys are wondering, they don't want to pay us because they don't want us to just talk about nothing but price. They want us to do nothing but fundamentals. And it's like, hey, I love the fundamentals, but we got to talk about price.
Yeah.
So
I have a quick weigh in on this one, and we can move on.
Yeah.
Cardano, I was reading into some of the engineering threads on Reddit around Cardano, and it looks like it's not like people really, the engineering community is not upset by this at all. In fact, they cheer on delays because it just shows that this is going, and on Ethereum and Cardano side, these delays, they cheer on these delays. They're not discouraged by them because it signals robustness, and it signals attention to detail, and the time to completion is not so big of a factor. And I think that as we move on, I think even the kind of the trader mindset is going to kind of evolve and not linger so much and put so much weight on the timing of these releases. Now, also you can flip the script. I think also that the PR departments and the release departments of Ethereum and Cardano and any other blockchain and any other software for that matter, I think they're also going to mature in how they're communicating to the public and making sure that, hey, let's just not even say that we're going to release this until we have it 100% ready. So I think that those two sides are going to evolve to where in the future of crypto, it's going to be much more of a cohesive relationship between traders, engineering, communities, and the actual developers themselves. I think that there's going to be a much better communication, and expectations are going to be a lot more balanced and leveled out. But right now it's not. The trading community wants it now. Hey, you said it was going to be June 20th. Why are we waiting this long? We're going to sell off. And Cardano, the developer side, they're just like, we don't care about the price right now. We care about getting it right. And the engineering community is kind of parroting that, and they're applauding that sentiment. While the trading community is like, we want it now, and c'est la vie, that so is life. Things are going to have to go on and mature and develop over time, and I think that's what we're going to see. By 2025, I don't think we're going to be having these delay issues in the same way.
And I'm working behind the scenes to get Dan, Crypto Capital Venture, to come on the show. He does a lot of Cardano stuff, giving some talk from him. So look forward to that in the future. But long story short, I think there's also this kind of concept that people are comparing Cardano to these other as you said, these fast-moving projects. But these other fast-moving projects are so flawed. So it's like, hey, don't compare Cardano to how fast these other projects are moving, because they'll move quickly and then they'll have their flaws. They'll have their shutdowns. They'll have their outages. And or they overpromise how cool a new update's going to be, and then it's not really what they kind of said it was going to be. Cardano is doing it at their own pace, and some people do not like them for it, and that is okay and that is fair. But if you are okay with a slow and good product, those are the people that kind of love the Cardano space. Speaking of people I'm trying to get on the show, shout out to George. We are all George. We are George. Is it we are George? We're all George.
I have to say, I'm specifically George.
You are specifically George. Yes. We love George. George is going to be coming on very soon. I'm in talks with his team as well to get him on the show. So shout out to him and his team. We love us watching George. That's one of the things I do more often than not before the show goes on. I'm watching George's show.
There's one more comment, and I want to give you the discretion to deny or to move on if you want. But Mike, Macro Strategies asked Tim. It got a little spicy yesterday on around the blockchain. On the blockchain.
I'm going to talk about that here in technical analysis. By the way, in case anyone was wondering, because people love to spice things up. I'm not mad. I am not mad at Lifer. I respect Lifer. I think he's a very good technical analyst. I do disagree with him, and I'm going to discuss that. So for any of you who are wondering why I disagree with Lifer, I did have to do some research because I wasn't used to the terminology he was using. So let's go over to the charts real quick. I'm gonna go out to the daily chart. So in case you guys didn't watch Around the Blockchain, or even if you did, I'll refresh you guys on what I'm talking about. So you guys know that I have been a very big proponent. I'm actually gonna go to BLX for this because I'll be able to see a longer time frame. You guys know for a while now, I've talked about the fact that every single bottom that Bitcoin has ever seen in its entire history, and every single top that Bitcoin has ever seen in its entire history, except for one example back when we had the pandemic, which was a black swan event, every single one of them had bullish RSI divergence. Now, that was what I said. I want to pause right there. Bullish RSI divergence. What is bullish RSI divergence? Well, it's when the RSI and the price are going in opposite directions. If it's bullish, we're looking at the bottoms. If it's bearish, we're looking at the tops. So I'm realizing I do need to clarify because there are three different types of divergences. There are strong divergences. So for the bullish case, a strong divergence is when, so here's one that we could have said, it just didn't play out. A strong divergence is when the price bottoms go to the downside, but in the same timeline, the RSI bottoms, which my screen's being ridiculous on me, it goes to the upside, right? So this is two opposite directions, specifically price down, RSI up. That is a strong bottom. My point here is that every single bottom we have in the history of Bitcoin has a strong bottom except for this one right here, which is the pandemic. So he commented, he said, no, Tim, we do have RSI divergence. We absolutely do have RSI divergence. And he started talking about type C RSI divergence. Now, I was not familiar with type C. I'm used to the terminology strong divergence, weak divergence, and hidden divergence. He started talking about, Tim, we have type C divergence. And then he talked about these same points. He went over here. The RSI bottoms are flat. In the meanwhile, the price is going down. So here's the thing. Lifer is correct. He is not wrong that we have what he calls type C bullish RSI divergence, but what I call weak bullish RSI divergence. So it all depends. Like, do a quick Google search. You guys are going to find that the more common definitions of it, the more research is you're going to see strong, weak, hidden. But he is correct that there's another way to phrase it, type A, type B, type C. So I didn't know this, so I had to kind of go back and realize we were arguing using very different terminologies. And where he got confused is because I said, no, this is not strong bullish RSI divergence. He's like, well, it looks pretty strong to me. Look at the angle changes right there. That's pretty steep right there, and that's it's a strong type C. It's a strong, weak, bullish RSI divergence, but it is not strong, bullish RSI divergence. So that's why I said I respect him a lot. He is correct that we have weak or type C bullish RSI divergence. We do not have strong bullish RSI divergence. And like I said, what I'm not saying it absolutely has to happen in the same way, and I said this on the show, we also in the past have always had a blow off top at the top of our bull markets. We did not have a blow off top this time around. So I am open to the case that maybe the bottom's in and we don't have to have that strong bullish RSI divergence. But in case you guys are wondering what I was talking about and what I'm wanting to see, it would be very interesting to watch the price of Bitcoin potentially drop down to lower levels than, and I don't need it to drop necessarily even to 17,600. The candle body closes is what correlates with RSI. The candle body close low that we have for Bitcoin that we touched here twice actually is about 18,800 or so. So all the price of Bitcoin actually needs to do, and I'm going to help you guys out by zooming in just a little bit. Oh, I got to fix this because I don't want to draw on the chart and make it messed up. All the Bitcoin's price we need to do at some point down the road, and it's not going to do it just like this, but let's just play with me here for a second. All the price would have to do is kind of come down and then end up having a daily close lower than 18,800. And in the same timeline, the RSI price continues to go down, but it ends up, when we get to this level over here, it is higher than this bottom of 20 on the RSI. If we have a lower candle body close and a higher RSI, that would give us strong bullish RSI divergence where the price is going to the downside, but the RSI bottoms are going to the upside. That is what we have always seen in the past. And again, I'm not saying we absolutely have to do it because trends are meant to be broken, but go back and do your research, do your history. I've done this on the channel before. Every single bear market that we've had before, we had strong bullish. Look at this. Look at the bottom prices. That does not correlate with the exact bottom price. We have, if I spread this out for you guys, we have bullish RSI, strong bullish RSI divergence right here that marked the bottom of our 2018. Is this 2018? Yeah, 2018 bear market. This is fun. This is why I need a bigger screen here, Smay. I sometimes get lost. Right there. That's strong right there. If I scroll back again, back to the bear market bottom that we had back here. Let's see, where is this? This is in 2015 or so. We have strong here as well, where the RSI right here is going to the upside. It's very faint, but that is a low. That's not a flat bottom. The RSI is lower over here, but the price is going down. That is bullish, strong bullish RSI divergence as well that we have going on right there. So this is just all the implications we need. Every time we've done it on the bottoms and every single time we've done it on the tops. At the tops of bull markets, we've had strong bearish RSI divergence. So that was a lot. And I know you guys had to kind of stay with me on that. I'm going to go back to the normal one and we're going to talk about, more up-to-date TA. But in case anyone was wondering what happened there, it was a confusion of terminology, but I hold fast to my argument. We have not had strong bullish RSI divergence yet. And the point I went on to say, because it's not just about technical analysis, it's also about following, the sentiment and the fundamentals of the market. I think that we have a lot of bullish fundamentals and sentiment in the space right now. But when I hear analysts, and some of them are very respectable, but when I hear analysts start saying things like, oh, that's it, guaranteed, the bottom is in, we don't have to go lower. That's not really where I feel like we really should be sitting. I think that the whole point of bottoms is no one will ever really, really know when it happens. And it's going to take a long time before we can really confirm where the bottom is. But the fact that people are just flipping the script so quickly. Also, I'm looking at this daily chart right here. Look at the RSI just even right now. Look at the last time we came up here to the kind of the overextended portion of 70. Back here, the price of Bitcoin was sitting up around, we're getting close to $50,000, $48,000. We're starting to get back up towards those levels, and we are still sitting below 25. I think that we have a good relief rally going, and I think we could even touch into the 30s, and there's an outside chance we might even get up into the 40s. The problem is we're going to be overextended on the RSI on the daily chart, and we're going to have to come back down. Now, the question is, do we come back down to 25? Do we come back down to 20? Do we come back down to 18? Do we come back down to 17? Do we get really bearish and actually those $13,000, $12,000, $10,000 predictions that some people are holding tight to, do those end up coming out down the road when the Fed has to flip back hawkish? Because right now, they're getting a little dovish on us. They're giving us a little hope in the market. They're trying to save us from going into a recession. But when that recession inevitably comes and the inflation of the US dollar is just so out of control, we could be in for a really nasty scenario where Bitcoin might have to drop. But we're going to talk about that later in the show, that potentially could Bitcoin just decide, nope, we don't care about your broken economy. We don't care about your recession. We don't care about your broken dollar. We're going to go ahead and climb anyway. We'll discuss that here later. But that's just the, if anyone who watched Around the Blockchain was questioning what happened there, that is my side of the story, and I'm sticking to it. With that being said, let's get into some more detailed technical analysis here on the charts and look at what is happening this morning over here on Bitcoin. So the first thing you guys have noticed this morning, I think some people were kind of concerned because we started to drop a little bit. I'm going to go down the hourly chart. We had a couple candles here dropping. Notice what these candles did though, and I'm going to tell you guys right now, this is massively bullish. And I'll give you guys a little tip. When you're doing TA and when you're trying to decide where the price level is going, make sure you're checking on the charts, you're keeping your levels, your old lines drawn and significant levels, but also make sure you pay attention to the news. Because my first question when I came in this morning, before I got to open up my computer and do my research, I said, T-Shroom, is there any big bearish news out there that really should affect price? And, there is some bearish article titles, but there really was nothing fundamentally that was bearish. So I was like, okay, this drop, I don't think there's necessarily a lot of pressure on the market to drop. Rather, this is a very bullish formation. So again, I'm on the hourly chart. This red line you guys see right here, remember that bear flag we've been talking about for a while that I believe now is invalidated because we're just getting a little bit too overextended? This line has been significant. We had a false breakout. We came back and used it, ended up coming back down into it. But look at the significance of this line. On our way up, we tested it and got rejected. So this resistance held up. We came back down, kind of reloaded, and then we broke through. Well, okay. How do we really decide as a market that we're ready to conquer this point and say that this point is no longer a threat to us? Well, the strongest thing you do is actually come back down to it and use former resistance as support. And guess what? That's exactly what happened. So for anyone who's concerned about Bitcoin's price this morning, futuristically, it doesn't happen every time, but more often than not, when we flip a level of significant resistance and turn it into support, that's actually majorly bullish. In the same breath, though, when you flip a level and you turn it into, when you flip a support line and turn it into resistance, watch it maybe rally back up to that point and turn that support into resistance, in which case that's massively bearish and just kind of confirming to the market, hey, we lost this level. The bulls no longer have control over it. So as it stands right now, I'm not too concerned about Bitcoin's price. I'm still keeping my eye on this golden pocket zone right here, the green. I'm going to go back up to the 4-hourly chart so I can get more clarity there. I'm still watching this golden pocket right here using our Fibonacci. This is, in case you guys are wondering, haven't seen me do this, the Fibonacci golden pocket I'm talking about is, of course, when I come back over here to June, the peak right before the big dip down to that $17,600 price. Golden pocket is significant. So you're going to see also what we did. We came down and kind of retested the 0.5 level on Fib, kind of used that support. So it's kind of that conjunction right there where we had the resistance and the 0.5 coming into play. We used that. We've bounced. We're back up. Watch out for 25.4 to about 25.7, 25.8 or so. If we can break through that with confidence, and some of this is repeat TA, but I just want to continue to stress this to you guys. There's just not a whole heck of a lot of volume separating us from a $28,000, $28,600 to maybe even up to the $30,000 level. There's not a lot of volume separating us. And if Frankie's still in chat, I got to watch his show last night. He was talking about this over there. So shout out to him. Fantastic TA. That's what's cool about TA, is we all have our own ways of doing it, but more often than not, you're going to find us talking about similar numbers, and they end up coming pretty stinking darn close to true every single time. And if it doesn't happen, is usually a fundamental update that no one could have been prepared for that changes it. But that's what I'm seeing right now. I'm going to check on Lux Algo, update you guys on what's happening over there on the 4-hourly chart. I do believe we have been bullish, yes, but we are sitting at take profit. Here's the question. I wonder if this is going to reset, because we took the hit, take profit, kind of came down. I want to see if that take profit kind of resets there. The daily chart, though, we do have a little bit more to go. It's actually giving us a take profit above that golden pocket. So it's saying potentially getting all the way up to 26,000 before maybe there's significant resistance in play. We'll keep an eye on that. But what I do love is now we do have the last 3 days are green on Lux Algo. Last step and last piece of the puzzle for Lux Algo to be a great sign is when this trend catcher turns green. I would like to think maybe most of you guys have already entered into trades, or if you're going to enter one, you've already entered one. But when you see that trend catcher turn green, that is your confirmation to be very satisfied with your trade, and watch for marks probably up around 26,000 before you start taking profit on those trades. But be patient. It will come. It might not come today. It might not come tomorrow, but it will be coming here soon. And then again, my last thing I'm going to say about Bitcoin here before I open back up potentially to chat is just because we rally, just because we break this golden pocket, just because we hit 30,000, and I'm going to be honest with you, even if we start going up towards and start using Fibonacci extension on this and go up towards 38, 39, 40,000, I still think for anyone who's going to say, hey, it's not possible for us to go down and set a new low, it is. It is still possible. There's a lot of things developing on the fundamentals. There's a lot of things happening in the economy that have to be taken into play. So it's really going to come to question, will Bitcoin just kind of branch out and do its own thing and reject all of the fundamentals of the economy and the US dollar? Or will it kind of stick with maybe the commodities and with the equities and with the stock market and potentially drop down? That is a debate to be had over the next couple of months. But I do believe for the short term, watch us begin to trade maybe at least above this $25,000 level, $26,000 level, and maybe hover between 26 and 30 for the next couple of months. Smet, you can go off my screen now. That was a whole lot. I haven't done a lot of in-depth TA like that here in a little bit, but I hope that that was really helpful to all of you guys. And other days we've been going through Ethereum, Cardano, but I definitely want to get into our conversation about recession. So if we have some time at the end, potentially we will maybe go look at some TA, some other coins as well, because it's not just Bitcoin that's bullish right now. Ethereum, Cardano, I like what Matic is doing. Talking all of them. Solana is doing well as well. So we can go and do those things in future videos or maybe even later here. We do have to announce our HODL Trophy winner. And unless something crazy bad happens, it does look like I'm in for another victory. But I got to wait till 10:55 to officially get that W. All right. T-Shroom, was there anything in chat while I was doing all of that? Any comments, any questions, any concerns, liabilities? Critiques?
Liabilities.
I don't know.
We were approached by a couple attorneys. No. Yeah. So we did get a $2 donation from iChart Daily. Great TA, and I agree. Double bottom is best.
Yeah.
So yeah,
Yeah. Again, I want to make sure people are stressed. Like, I'm not saying we absolutely have to. Like I said, I think a lot of people, and they for good reason, when we thought we weren't at the top of the bull market before, one of the reasons why, hey, we've always had a blow off top at the top. This isn't a blow off top. We're going to keep going up. That was a credible argument, right? The fundamentals changed the boat. The fundamentals started bringing us down. And then you can say there's some other charts and other reasons to look at TA and say that we could have expected. There was still strong bearish RSI divergence, but we had never seen a top like that on Bitcoin. In the same breath, I'm saying, hey, we've never seen a bottom that didn't have strong bullish RSI divergence. We don't have it right now. Are we waiting for that? I think there's still a good chance it could happen, but there is a possibility it won't. And that's, we have to prepare ourselves for both scenarios.
Yeah, absolutely. And then we also got an interesting comment here, not paid, but William Coe said BTC is always going to bottom at below 20K, 15K, or 10K. Says those who are just starting to build their BTC bags after getting rugged by Luna, Terra, USD, Celsius, 3 Arrows, Capital, BlockFi, ROTF, LOL. So
So here's the thing. I don't know if, again, I'm saying I think that some of those levels could be hit, but I don't know if they absolutely have to. Here's what I do think is going to be interesting, and this is another thing that we see happen over and over again. When institutions miss the boat gets brought back. When retail investors miss the boat, sorry, you got to catch up. You got to go on a limb and try to get back in the boat down the road. You got to swim out to them. What we're waiting on right now is regulational clarity. Let's say Bitcoin is ready to go. Let's say Bitcoin is ready and it doesn't have to wait on a recession to get going. It doesn't have to wait for the end of the recession to get going. I still think that a lot of institutions really, really want to be in on Bitcoin, but they're just not sure about the safety of it because they don't have clarity when it comes to regulation. I would not be surprised to see, as we get more clear with what the regulation is going to look like, that you're going to see a dip correlate right with it, with a nasty but really cool looking spring V bottom, where the regulational clarity comes out, the price drops down, maybe back to around 20,000 and maybe lower down to that 17,000, 16, 15, whatever you want. But then it's like we went down there really quickly, and institutions get in the way they want to, at the levels they want to, and then boom, we jump back up. We get our strong bullish RSI divergence. We get those low levels. We brought the boat back for the institutions, but then we take off like we got a fire lit behind us. I'm not saying that's absolutely going to happen, but watch something similar to that kind of happen when regulation gets more clear down the road.
Exactly. Yeah. Well, that kind of concludes. I didn't see a ton more. So yeah, if we want to move on, we can.
Yeah, we're gonna jump in our discussion. We kind of started getting there here with our conversation a second ago, but really quickly, we do have sponsors for this channel that keep the lights on and let us continue to come to you guys each and every single day. And we love them absolutely. We got two of them, and they're very correlated. One of them is Hedge, and you guys have heard us talk about Hedge before. If you've never heard of Hedge, though, it's going to allow you to be paid in crypto. Because guess what? Right now, even sitting at 24,200 or so, 24,200, this is still a great time in the longevity of the Bitcoin space to get in. If you had told us 1 year ago today, hey guys, would you like to purchase Bitcoin at $24,000? We would have said yes, please. Thank you, ma'am. This is still a good time to buy, but guess what? When you buy on exchanges, you do have to pay exchange fees. Well, Hedge allows you to DCA and get in at these levels and save yourself exchange fees by being paid directly from your company. Yep, you can attach a cold wallet or your exchange wallet or whatever you want and get automatic deposit from your job into crypto, whether you want it your entire paycheck, a portion of your paycheck, that's completely up to you. But make sure, check out that link down below and find out more about what that can do for you. And then the other thing is, you have to be covering taxes. So we also have our sponsor for this channel is Anthony Price, CPA, phenomenal CPA. He is ours. He helps you guys handle your taxes. He helps you guys do financial planning to protect all of your gains and make sure you don't pay Uncle Sam one more penny than you absolutely have to legally, because that's the big key word there, is we want to avoid taxes legally. We do not want to break the law. Never would advise that. So make sure you sign up with Anthony Price. You can get a 20-minute phone call absolutely free with him. Check it out down the link below. You don't want to miss it. With that being said, T-Shroom, I'm going to throw it to you to kind of open us up to this conversation and this concept. Will Bitcoin kind of just ignore the recession? Do they not care about the United States? Or is there going to be significance to this recession storyline to the price of Bitcoin?
For sure. So yeah, so we got this headline, and I was kind of surprised to read this, but then it made a ton of sense as I was reading it. So you can go over to my screen smay. And again, CoinDesk with their heading here, when you scroll up and down, it gets in the way. But we're gonna push through. We're gonna push through today because it's Optimistic Monday. What is a recession, and does Bitcoin care? Students of the economy learn at some point that 2 straight quarters of declines is tantamount to the definition of a recession, but it depends on who is being asked. And these days, if you listen to policymakers, they're pointing to an altogether different standard. That standard, the National Bureau of Economic Research, NBER, which most analysts and U.S. officials defer to when determining the timing of economic cycles, says that a recession is defined by more than just GDP. A recession is a significant decline in economic activity that is spread across the economy and that lasts more than a few months, according to the NBER. The inherent subjectivity gives policymakers, including the Federal Reserve, much-needed wiggle room, very different from the easy-to-classify 2 quarters definition. It was simple to understand. It was black and white, said David Wiesel, senior fellow in economic studies at the Brookings Institute and former Wall Street Journal economics editor. The NBER definition is kind of mushy for good reason because there are lots of factors. The NBER was created in 1978, and going back in history, 2 consecutive quarters of GDP decline was the only definition that existed, Wiesel explains. Similarly, at a press conference this week, a reporter asked Federal Reserve Chair Jerome Powell, and we listened in on this if you tuned in live, if he would consider the U.S. economy to be in a recession if GDP declined in the second quarter. The Fed does not make a judgment on that, Powell said, though if you think about what a recession really is, it's a broad-based decline across many industries that's sustained for more than a couple of months, and there are a bunch of specific tests in it. And this just does not seem like that. It just doesn't seem like that, Tim. Jerome doesn't feel like this seems like a recession. It doesn't seem like it.
Well, it's all comes to the interpretation of the definition, and that's been a fun topic this week.
I think that we have an indicator that does measure a broad-based of the industries, and I think it's called the GDP. If I'm not mistaken.
Interesting.
Doesn't the GDP kind of measure a broad base of industries? Maybe I'm crazy for thinking that. Who knows? But what does this mean for Bitcoin? Let's get down to the meat and the potatoes, if you will. Have some interesting take here, okay? So interesting take ahead. For traders of cryptocurrencies, and specifically Bitcoin, the question is, does it even matter at this point if the U.S. is in a recession? The answer is most likely no. We're slowly learning that Bitcoin is not a store of value, but rather a store of excess value, says Jeff Dorman, Chief Investment Officer at the digital asset manager Arca Funds. Whether or not we are in a recession is irrelevant. Negative wealth fueled by declining business confidence and spending, as well as business revenues, results in less demand for Bitcoin, Dorman said. But from a structural standpoint, the largest cryptocurrency by market cap is unaffected. Bitcoin is nothing more than a call option on a future where Bitcoin is used as an actual currency in the face of declining confidence in fiat, he said. As a result, Bitcoin's price is simply a reflection of whether or not that probability increases or decreases, and from that standpoint, a recession could, in theory, increase the probability of investors looking for alternative in government fiat. And the rest of it kind of goes on in different ways, but overall, what do you think of this theory, Tim, that it's actually not a store of value, but a store of excess value? And is that true for Bitcoin always, or is this kind of a unique moment, or do you disagree altogether?
Can you give a clearer definition of excess value, like a store of excess
I was
value?
going to make a note there. Even if it's value or excess value,
yeah,
it's still a store of value.
I mean,
I don't understand what the distinction is.
I had an interview yesterday with Mark Yusko. Fantastic interview. Go watch that on Cointelegraph. And I'm going to get him on Around the Blockchain. Coffee and Crypto. That's rough. That's a rough one for the brain. Can I get the sad? No, I need a sad one. There we go. Thank you. I'll get him on Around the Blockchain too. Ben, I got you. I'm now best friends with him. So, okay, I'm going to transition here. Gonna get him on the Coffee and Crypto, where he's talking about, he's like, when people start to go fight the narrative that Bitcoin is a hedge against inflation, he said, let's just think about this real quickly. 2 years ago, a little over 2 years ago or so, Bitcoin was sitting at $10,000, right? Since when Bitcoin was last $10,000, Since that date, the Fed or the government has printed 50% of what is currently US dollar. So they doubled all the US dollar supply in the entire globe, right? 50% of what we currently see has been created since Bitcoin was $10,000. What is Bitcoin sitting at right now? It's been hovering around $20,000. The value of the dollar halved. The value of Bitcoin doubled. That's the definition of a fight against inflation. It's the perfect store of value to fight inflation. And so, yes, when we started getting up towards 69, it's not that's when you maybe, that's why I was saying, what's the definition of excess value? Could we say that Bitcoin at that point was excess value? But at worst, at the very least, Bitcoin seems to stay where it is a fight against inflation, where whatever really happens to the dollar and however far it gets weakened, it will get strengthened to Bitcoin. And then we're going to see at the next halving, and the price is going to go up even more, and it's going to get even more significant. So Bitcoin, when people fight and say Bitcoin is not a hedge against inflation, again, Mark Yusko, you laid it down perfectly, better than I could give it. So go watch that interview. But no, it's the definition of a hedge against inflation.
Well, so my quick thing on that, I think what he's saying by excess value, I was kind of pondering on that. I think what it's just, I think it's basically just saying that Bitcoin does well when there's an excess of wow, this was a great definition. I'm saying.
I love it.
It's in my mind. It makes sense. Okay, so what I'm right. give me a second. Okay, I got this, Tim. I got this. Don't give up on me just yet.
I'm not. I mean, I had my.
So what I'm saying is, when the economy's doing really, really well, and people tend to have excess capital, they have extra money. That's when they usually put it into Bitcoin. But even in that definition of what I was thinking there, then isn't that all store values? Because you don't put money in store value when you don't have money to put into store values. So anyways, I feel like I just derailed the show for no reason, so keep going.
No, you're good. I think that's a valid point.
That's fair.
It's a valid point.
Okay, thank you.
Yeah.
I think the meat and potatoes of what Jeff Dorman here is saying is that when you have excess, when a company is generating profits and they, what do you do with that profits, you can invest it. The first thing that you look to invest in is really conservative things like bonds and stocks, more value stocks like maybe ExxonMobil or like a Eli Lilly, right? But then, as you start to accumulate more and more and more profit, right, and you already have a ton invested in more conservative investments, you start to maybe look at growth. You start to look at like Google in its early days. You start to look at, like today you have Zoom is a pretty big growth stock. Right. But then, after that gets boring, you start looking at Bitcoin. And if you spend enough time looking at Bitcoin, you realize it's actually pretty conservative in the crypto space, but it's actually a pretty conservative investment in general if you understand software. But what I think Jeff is hitting on so eloquently here is that folks who aren't really looking into Bitcoin as a project, they're just looking into it as a high risk investment that other people on the street are also investing in. Right, they're not investing that same chunk of money that they're putting into, an Exxon, a Walmart, or a Boeing. They're putting in, a smaller percentage, a 2 or 3% of their balance sheet, just like we saw Santander or a new bank put 1% of their balance sheet into Bitcoin. They're not taking a giant risk with that, but they stand to gain quite a bit in the next bull run. So I think what he's saying is it's the excess value that is out there in businesses and in the retail space as well. They have a similar mentality when they're approaching this. And why would you ever, that money is almost a foregone conclusion in the sense that you don't expect that to necessarily, you wouldn't risk as much as you would put into Boeing or as much as you would put into Disney, you wouldn't risk anywhere near the same amount in Bitcoin if you're a big corporation. Now, individually, I definitely do that. I have a lot more in Bitcoin than I do names like Amazon or Apple or Google, but I'm in a different risk frame. Right. So, but ultimately the point I'm trying to get here is that Jeff's point is that it's that excess, that money that you almost expect not to get back. Why would you sell Bitcoin in that case? And that's where those really strong hands come into the market. Is they're like, I already know, like I have some SPAC plays that I knew I'm not even worried about it anymore. I'm down so low on it, I'm not even worried about it. But I didn't initially put that much money into it to begin with. So I think that's kind of, but all those 1% from the new bank and like a 10% from Tesla and X% from a multiplicity of institutions and retail investment, all those add up to the 1 trillion market cap in crypto that we see today. And what Jeff is saying is that that's not going to just sell off, because it's not something that they feel that they need to sell off. It's something that was, they kind of had already written off. We're probably not going to get this back. It's a high risk investment. And so that's why Bitcoin doesn't care that you broke your economy, because the economy, you change your investments when the economy gets bad, but the investments that you change are the conservative investments, the investments you can't afford to lose. And those investments are in things like the SPY, in the S&P, in the Dow Jones, in the NASDAQ, companies that the American people and the globe honestly rely on, right, for their gains and to hedge against inflation. But now when Bitcoin comes along, it's this shiny new thing. And to people who really look into it, it's this really awesome thing. It's the next Apple, the next Google. But, for most folks with a normal risk tolerance, they have to look at it as a high risk. And so therefore they're allotting a smaller percentage of their balance sheet, their portfolio, to that, and essentially writing it off. So they're not inclined to sell that high risk asset. Does that kind of make sense, Tim?
Yeah, I mean, that makes sense. And I think even continuing in, what we're going to see happen with this, I think the other factor that Bitcoin could really get a W against the recession is as we start to see lack of faith in the dollar.
Yep, absolutely.
I mean, look at what happened. That's what we were talking about this morning. Look at what happened to gold back in 2008.
Yeah, I've got that chart pulled up, actually.
Look at what happened with gold back in the 1980s when the value of the dollar was being questioned and the faith in the dollar was being questioned. The best commodity or anything of store value to throw money into at that point was to go back to gold.
Yeah.
Bitcoin's never been through a recession. This is the first major recession I think Bitcoin's going to go through, and potentially, as we call it, the digital gold. Are we going to see it be treated the same way? You show your screen. You can show a screen if he gets it up there.
Yeah,
I don't know
got
if he
it
has
up.
it just yet, but
Yeah,
the whole thing is I'm looking at that. There's that as well, and also did Bitcoin kind of play this just right? Like, you ever seen like those boxing movies, but even in real life, it's a strategy a lot of boxers will use or fighters will use, where you kind of just you let the other opponent kind of show you all of their moves, all of their strategy, and you wait for the right spot, and then you attack. In the same boat, we've kind of the U.S. economy, the U.S. dollar is going to back down into a corner where the Fed's going to have to decide here: do we want to fight inflation or do we want to fight recession? They're technicality-wise saying we're not in a recession. However, there's going to get to a place where no matter what they do, it's going to instill a lack of faith in the dollar. And then when we get that regulational clarity that comes out about what Bitcoin is going to be treated like, wow. I mean, watch the big money movers start shifting over into Bitcoin the same way back in 2008 and back in the 80s they shifted over into gold. Doesn't mean that the dollar will necessarily die, but it's gonna the big boys are going to shift over into Bitcoin. That's going to be good for Bitcoin, which is all the more reason for us as the littler retail investors to be getting as much supply of it right now, because with the economy being in trouble, we talked about this yesterday, it's going to be a lot harder to gain supply just because we're going to have to really be focused on making sure we're getting food on the table and roofs over our heads. But for those of us who have stocked up beforehand and have our supply nice sitting and ready, we will benefit from those massive increases when the institutions and the big pocketed whales get back into Bitcoin with that clarity.
Yeah. Yeah, so if you want to take a trip down
real quick,
memory lane.
Yeah.
So I've got the chart pulled up. This is gold. This is going back down to 2008. This isn't a spot price. This is a futures contract, so it's not going to reflect the actual price of gold. But if you go back to the end of 2007, right, this is where the stock market was peaking out before the financial crisis. And you go all the way up to this oversold point. I pulled up the MACD as well so you can see. It did 200%, essentially, 200%. In the time that the market was dipping and then recovering from 2008, obviously more than a dip. It was crashing and then recovering. But right around in here, 2010 and 2011, the stock market actually started to rebound. And so this is all overbought. This is all overbought for gold. And then, of course, it had a little bit of a pattern here and then corrected down and found a more fair valuation here in between that 200%. So it reevaluated down to about 100%, so about 90. So that's and that's just a rational, rush to value, rush to extreme value. Now let's zoom in on where we are now. And you'll see something a little bit similar with gold. So, folks are starting to find gold to be attractive in the last week. And you are starting to see, and this is on the 3-day, so this is very zoomed out, but you are starting to see a bull cross on gold right now on the MACD. And volume's kind of dropping off, but it has been green the last three candlesticks there. So, folks are rushing back to gold. I wouldn't say rushing back to gold, but you're kind of seeing that narrative. And in 2008, it was much more drastic than what it is now. And it was a much more fundamental issue that was going on with those mortgage-backed securities, really presenting a toxin, a contagion in the U.S. economy that needed to be fixed, and that correction was very painful. So far, we have not seen something like that yet, even with the correction in the U.S. Stock market. So overall, I think, but it's useful to go back and kind of see how people rush to value, and hopefully now, if things start to get worse, if inflation just keeps going and does not stop, then hopefully Bitcoin will be seen as an alternative to gold. And I think that some folks are betting that it will. I heard recently that there was an ETF actually launched in Switzerland that actually paired gold and Bitcoin that you could buy, and that was kind of interesting. Also, really quick, speaking of inflation rates, and I know, Tim, we want to get on to the next. One thing I noticed is that the French inflation rate that printed today was actually 6.1, so it came in a little hot versus the forecast and the previous 5.8. But then, as we talked about earlier, the Italian interest rate, 4.6, that's the Italian growth rate. The Italian inflation rate down here, 7.9, so lower than the forecast. So Europe is actually getting mixed results on inflation. And I'm bringing this to your attention because it's so important. These inflation rates right now, we're kind of scrapping for any data we can, so we're looking at Europe. But this next inflation print is going to be so important. Was it August 10th that we get the next inflation print for the U.S.? And that's going to be extremely important to note, because if that beats the forecast, if that comes in higher than forecasted, then that really, really puts that 100 basis point back on the table for Jerome Powell. And I know you're probably tired of hearing about the Fed. So let's talk about who won the trophy of all trophies.
I mean, that was really good. Again, we'll probably dive in more of that next week, more about the gold and Bitcoin comparison of what happens during recessions. But we are, it's a little over, but never really in doubt too much that I was going to win this week. Did the price even ever once we crossed 22, did we ever even get back down below it? I don't think we did. I think we made a nice little stampede up there to 24,000. And, this 2 weeks in a row, I think that's like 5 in the last 8 weeks. That is not fair. It is my time. It's May. You can't get jealous. Get you a dub. Stop being so bearish and get you a dub on this HODL trophy.
You're
a
dub.
I want to thank JD Park for the creator of this. I want to thank all of the bulls. I want to thank Jerome Powell for being dovish, that allowed the price to go up and stay up. Closing thoughts. That's all we have for you with crypto. I want to start making this a tradition that we give you guys just one little nugget to walk away with that doesn't even necessarily have to do with crypto. And that nugget is, it's Positive Friday. Go find somebody today that you be on the lookout for somebody who just needs a hug. Mm-hmm. There are people out there who are really struggling right now, and the whole point of this channel is to grow a community of world changers that have financial sovereignty for themselves and for others. And guess what? We got to start with the little things. Look for somebody who needs a hug today. Go give them a hug. We love each and every single last one of you guys. We will see you, though, next week on Coffee and Crypto. Look out for today's afternoon weekend wrap-up. And with that being said, I'll see you in the next video. Peace.
Oh, I got a real good